All right, let's go. Friday, March 8th. So we had a weak number in the payrolls today, up 20,000 only. The consensus forecast had it at 180,000 up. Actually, my forecast had it up a little bit higher than that, but it was a very, very weak number. And by the way, on my forecast, the numbers that I look at, and I look at a whole broad range of numbers like employment and withholding tax deposits, unemployment benefits paid out during the month, initial claims for unemployment benefits, the change in that, the 5-year average of the month, how many usually you see in this month, so it takes seasonality into effect, a whole bunch of things. The numbers were strong, the ones that I saw. So that was the basis for my forecast, and I think what it was picking up on was the rise, strong rise actually, in average hourly earnings, wages, okay? The biggest jump in 6 months. And the unemployment rate came down to 3.8%. So the reaction is kind of mixed. You've got stocks on the downside, which there's other things going on right now with stocks, which I talk about in my report, and I've been sending out a lot of emails on this if you want to find out what I'm talking about. And by the way, it has to do with what's going on now with the debt ceiling, with the rebound, the increase in reserve balances that we have seen in the banking system. That is not a positive. A lot of people think that's a positive. A lot of people are under this impression of that's money printing, that's the Fed putting money, that the banks are going to lend that out. No, it doesn't work that way. And I've explained this many, many times, and maybe I'll do a separate video again on it, but not right now. So that's an issue, that's a factor. The debt ceiling now is causing the Treasury to be unable to sell bonds, and that is a very important thing because that's what drains reserve balances out of the system, and that needs to be done. So that is problematic, and the longer that continues, the more drag it can put on, for example, bank lending. And of course that equates to maybe a slowdown in the economy. So you have that going on. There's some technical things going on. And by technical, I don't mean chart patterns or this or that. We're still in a growth mode. However, you've got some headwinds right now. We have some headwinds right now. Yesterday's reaction to the ECB committing to another round of that TLTRO, I spoke about that. Okay, they knocked the euro down to a new year-and-a-half low. We are seeing some bounce because, let's face it was very, very oversold on almost any time frame you look at, hourly, daily, weekly, monthly, extremely oversold. So we're getting a bounce on that. Monetarily speaking, and let me just say this, the TLTRO has zero effect on exchange rates from a fundamental point of view and a monetary point of view. The sell-off, like everything that's been going on with the dollar rally and the currency sell-off, is based on speculation. And I have absolute 100 proof of that. If you want the proof, I'll be happy to email it to you. Go to my website, sign up for a 30-day free trial of MMT Trader. Pitbulleconomics.com. Now, MMT has been going viral. We all know that. See it everywhere now. And like I've said a number of times, it's exciting, it's gratifying for me to see. I've been involved in it for 18 years. I was one of the first, if not the first, out there in major media on television talking about it during my times at Fox News. I spoke about it in other venues, CNN, FN, when they used to have that show. CNBC. I pitched an MMT-based show to CNBC back around, I don't know if it was maybe 2010, 2011, maybe earlier than that, I forgot, which they were not interested in at the time, and so on and so forth. But I'm happy to see, it's very exciting that it's going viral, and I never thought it would catch on this rapidly. I never thought it would catch on, period, but it's great. And let me just mention something kind of amusing. I am seeing now today, I saw a headline on Bloomberg.com MMT. How is Wall Street going to use this to trade and invest? And it's something I've been doing for a long time. And it's something through my service, MMT Trader, which I've been putting out now for 3 years, my subscribers have been learning how to do. So now this question mark, oh yeah, MMT, that sounds so intriguing, and it's catching on, and everybody's talking about how do we use it to trade and invest. Well, I've been doing that. And I think we're still a long way, at least in terms of Wall Street's understanding of how to apply it. Because the understanding from what I read and what I hear, it still gets a lot of things wrong. A lot of things wrong. Now there was an interesting, there's this debate that kind of popped up between Stephanie Kelton. Some of you might know Stephanie Kelton. She's become really the face of MMT. I think she came into the whole movement after I did. She's now everywhere, all over the media, which is great to see because she's very well spoken and she understands her stuff. But a kind of a dispute, a fight, if you will, a disagreement between her and Paul Krugman. Paul Krugman, the economist who writes for the New York Times. When Stephanie Kelton said something, which I've been saying for a long time on these videos, that government spending, in essence, deficit spending, causes interest rates to go down, not up. And the natural rate of interest for a currency issuing nation that spends in its own currency and where all of its debts are denominated in its own currency, the natural rate of interest is zero. And I've explained why. When the government spends, the reserves build up, those payments, reserves build up in the banking system, they pile up, they pile up, they pile up, and the banks, wanting to lend out their excess reserves overnight, they kind of compete with one another with their rate they're willing to lend, because anything's better than a zero rate, but then what happens is it all converges down to zero. That supply of funds in the banking system, right? It's just a question of supply and demand, and Kelton was saying that. The supply of funds in the banking system created as a result of government spending drives the rate down to zero. She called it like a gravity, which I think was a great way to express it. The gravity pulls it down to zero. And Krugman was saying, no, that's wrong. When the deficits go up, the rates have to go up. And he shows a chart and he says, here, look, and he picked out a period in the 1980s. I'm not quite sure why. I think it was a period under the Reagan administration of high deficits. And he showed a chart of the deficit, and then he showed a chart, on the same chart there was a line where there was the monetary base. The monetary base is the money supply that the government directly controls. Okay, that's dollar bills, coins, and bank reserves. And he said, look, the deficit was going up and the monetary base was flat. So it didn't expand like you were saying. To which Stephanie Kelton said, you forgot one thing. The base is managed through the sale of treasuries. The sale of treasuries drain the reserves, and the Fed and the Treasury act together to keep the base at a certain level. Hello, Krugman. You forgot one little thing. The sale of treasuries. So it was beautiful. It was beautiful. Wow, you know what? A lot of these guys, like we saw Larry Summers, we saw, what's his name, Powell. Oh, that's just wrong. They have no answer. They have no answer. Now, Krugman, no answer. No answer. And yet, there they are, out there, pontificating, opining, and they're completely wrong every single time. Anyway, folks, that's it for today. Have a great weekend. See everybody next week. Bye-bye.